Good evening, ladies and gentlemen. Welcome to episode 19 of the Australian Gold Weekly Review. Joining me today is the managing partner and director at Gold Hub Australia and the Australian Gold Fund, Mr. Brian Chu. How are you, Mr. Brian?
Hi, Ved. I'm doing okay. Currently in the New South Wales Victoria border. Was very busy this week being down in Melbourne for some work-related purposes and also the Fat Investment Research Christmas party. And I will be heading back home in the Southern Highlands tomorrow, back on the road again.
Well, holiday season is not too far away. In fact, it is holiday season in some parts of the world already. And I think our precious metals, gold and silver, are pretty much in holiday mood, as we've seen gold and silver enjoy spectacular rallies this week. So in this series, we'll be talking about movements in precious metals like gold and silver. And we'll also be talking about precious metals and mining equities in Australia primarily, followed by companies from any other countries if we believe that they are valuable to your journey as an Australian investor. So continue to keep watching, and we'd like to remind you that none of the content that we discuss in our video qualifies as financial advice. And in today's episode, we'll be delving into the investment life cycle of properties in Australia. And a major chunk of that discussion is going to involve numbers. So we want to make you aware that while we have put our best foot forward in researching data and numbers from the most credible sources, we still do not make a claim that these numbers are absolutely accurate. And we would advise you to proceed with caution and treat this video as content made for only entertainment and educational purposes. None of the content qualifies as financial advice, and we recommend you seek a licensed expert before you make any investment decisions in any asset class. So with that said, let's move forward with the video. Let's start with gold today. So gold finished the week at US dollars 4,198. So breached the psychological level downward a little bit from the 4,200 mark. Midweek, we saw the metal reach for $4,250 an ounce before I believe the traders started taking profits, which pushed gold back down to US dollars 4,200, because that seems to be the only reason for gold to go down this week, because we've got a rate cut coming up next week, which investors and institutions are pretty sure of. We've got the probability at almost 90% now. So that should push gold prices only upwards and not the opposite. So with the rate cut coming in, Mr. Brian, we've seen gold in the past 2 weeks sort of retreat and rise back up again and touch the $4,250 mark as well. So do you believe that investors have already priced in the rate cut, or are we going to see a strong surge in gold once the rate cut has been announced next week?
Well, I think it's interesting that gold's bounced back by about 4.5%, since I think it was around 2 weeks ago, actually. I remember 2 weeks ago we saw gold actually made a meaningful comeback, having gone through 6 weeks of correction from mid-October. And 2 weeks ago, I remember also it was on the Friday US trading when the probability of a rate cut for December rise from about 44% to over 70%, because one of the Federal Reserve governors said that he believes the Federal Reserve needs to cut rates by a larger amount in order to fix the problems that he sees in the US economy. Now, the market has priced in some of the movements for the expectation of the Federal Reserve rate cut, and I think they also are factoring in the end of the quantitative tightening by the Federal Reserve, as in they're removing the currency supply. Quantitative tightening means that they were trying to sell bonds back into the market to reduce liquidity, and they have actually stopped that. So there's now more liquidity in the market, which some of which will actually find its home in gold, which we're watching at the moment. Now, the jobs data looks like it is actually the U.S. economy is doing slightly better than expected. It's also worth noting that the numbers are actually not a good reflection of the state of the economy, because there have been significant numbers of illegal immigrants who have been deported out of the US, and the number of job losses spanning from illegal immigrants being deported and locals slowly being hired to replace them is still kind of moving its way through. So I would say, rather than look at whether the interest rate cut could what the impact it would have for gold, silver, gold mining companies and the market after the decisions announced, it's worth looking at the impact and the consequences of this 3 to 6 months down the line, because the market takes a while to actually feed for these effects to actually feed through.
Right. Thank you so much for that, Mr. Brian. Really insightful in terms of looking at the trajectory for gold. So we hope our viewers had something to take away from in this context. Moving on to silver. Silver is closed the week at US dollars 58.36 per ounce. It's a record high, and I don't think anyone saw it coming. We did expect that silver would follow suit with gold, and if you couple it with its industrial demand and the fact that it's more volatile than gold is, especially in bullish phases, we knew that it was going to go up significantly, but I don't think anyone saw the 58 and the $59 mark coming. And, just a few months ago, we were talking about silver breaching the $40 an ounce mark, and it's now looking to breach the $60 an ounce mark. So did you see that coming, Mr. Brian, or not?
Well, seeing a break above 50 recently made me hopeful that silver was going to silver's recovery was going to be more significant than that of gold, which I expected. And I saw that also happen with the ASX Gold Index. But when it broke above 54 and then went above 55 and approached 60, no, I actually didn't see that one coming. And I also found it a little surprising that with the gold stock indices, especially the ASX Gold Index, that actually, even as silver broke to new highs, the market didn't take the ASX Gold Index to to levels higher than what we saw back in mid-October. And we saw on Friday trading, gold's actually pulled back below 4,200 US dollars, or less than 6,400 Australian dollars. Silver also pulled back a bit, and the ASX Gold Index finished lower for the week. And I'm not sure whether this may spark another correction because it's not making a new high, or whether whether this might be just gold, silver, and gold stocks building for the next rally. There's a bit of uncertainty on this one right now.
Yeah, for sure. And silver is obviously a more volatile metal than gold in either directions. So we're keeping an eye on the fundamentals as we invest in silver, while gold ETFs and gold-based assets continue to be our primary focus in terms of allocating our capital. Moving on to oil. Oil's closed the week at US $60.13 per barrel, so finally made it across the $60 mark, and I think it's primarily fueled by the fact that the US-Venezuela tensions are rising and have been brought to the front for everyone to see. And that is because Venezuela is a primary supplier to China, and I believe among the top 15 suppliers in the world. I think they come in at number 12. And there seems to be no agreement between the US, Russia, and Ukraine to bring an end to the war between Russia and Ukraine. So the sanctions on Russian energy exports continue to be upheld. which put in a lot of bullish pressure on oil and brought it back up to $60 per barrel, despite the fact that there is plenty of supply and not much demand to come in 2026. And finally, the ASX Ordinaries Gold Index is at 17,358.59 points, so decreased by 253.29 points. And this is an effect of, I believe, the index following suit with gold, because the index rose to, I believe, 17,600 points midweek, and it has now dropped back to 17,358. And this is primarily because gold decreased from 4,250 to $4,198 per ounce as it approached the end of the week. So would you have any comments, Mr. Brian, on specific ASX All Ordinaries Gold Index constituents in terms of whether it is really the fundamentals of our miners that are causing these ups and downs, or whether the index is simply following suit at the moment?
So I'm just looking through some of these company performances, and my view is that there may be a war of worry going on with gold stocks at the moment, because while silver's gone up and broke new highs, gold is also rising higher, but it's not at the same level as we saw in October. So this is a part which I'm unable to wrap my head around, why this time round the correlation between silver and the ASX Gold Index is not as clearly seen. So we saw in the middle of the week that the ASX Gold Index went higher, more than 17,600. I think at one stage during intraday trading, the ASX Gold Index, I think, went up to even 17,800 points or so. But it closed lower during at the end of the day. And we actually only saw the ASX Gold Index close above 17,600 points on Wednesday. Fundamentally, the companies are fine. In fact, I took some opportunity now that we've actually the amount of cash that we needed to settle the property, we sent that through, and the settlement is for our properties next Wednesday. So we actually added a bit we actually added to West African Resources and Pantoro Gold, because we saw the price slump, and we believe that there is value in these companies on top of a few near-term producers, developers, explorers. We're still a bit cautious about right now, not because we see any. There's some of these companies are actually rising quite significantly during the on a daily basis. It's interesting to note, if you look at the performance of companies on a day-to-day basis, the ones that are rising the most in the past 2 weeks in the recovery are actually the small explorers rather than the large producers. So, but we're cautious about explorers because of how risky they are, and some of these companies, their assets are not mature, and they are many years away from production. So, to wrap up answering this question, we believe that the market is still waiting for full confirmation that this recovery, which began 2 weeks ago, is going to sustain itself. And at the moment, the market, at least from what happened on Friday's trading in Australia and also the US, where they actually pulled back, they might actually the market might actually be looking for another base to form before finding the confidence to buy the larger companies above the record levels that they achieved in mid-October, before rising further and taking the smaller companies on the ride. So we'll probably have to wait till 2 weeks or so before we're clear, we can clearly see a trend.
Right. Thank you so much for that, Mr. Brian. I think a very clear and concise look at what the outlook for producers seem to be going down the line. And with that, we come to an end of our preview section of the video. If you want to continue watching, all you have to do is go up to the goldhub.com website and sign up to be a member. It's completely free of cost and takes only 5 minutes of your time. And we recommend that you do that because moving here from now in our members only section, we're going to talk about the entire investment life cycle when it comes to investing in property and compare that against investing in gold. Now, when we put forward this comparison, we by no means want to discourage anyone from purchasing property. And that is because we know and we understand that investing in property, or rather purchasing property, is a multifaceted decision. And it is as much about security, stability, and peace of mind as it is about looking at it as an investment asset. So the discussion that we're going to have about property versus gold moving forward is not meant to discourage anyone from investing in property. And we'd like that you think about this discussion looking at property as exclusively an investment asset. What we mean by that is we want you to take our discussions into account, assuming that the investor in property already has a home that they're living in, to ensure that you understand this as an investment-only rational basis and not any other. So go onto the Gold Hub Australia website, sign up for your membership, takes only 5 minutes, and we'll see you in the members-only section.